Okay, today we're diving into a real head-scratcher, a fascinating business mystery that's playing out right now between two of the biggest names in tech, IBM and Accenture. You see, on the surface, these two companies look almost identical, but their fortunes, they couldn't be on more different paths. We're going to figure out why.
But before we jump in, just a quick heads up. Everything we talk about today is purely for informational purposes. Think of it as a deep dive into business strategy, definitely not investment advice. All right, let's get to it.
So this is it. This is the heart of the mystery, all in one. Pretty shocking chart. Take a look. Over the last 5 years, IBM's stock has shot up an incredible 181%. And Accenture? It's up 0.32%. I mean, that's basically flat. This is a huge, huge difference in how the market sees these two companies.
And that leads us to the big question we're trying to answer here. Why? You've got two giants in the exact same field, facing the exact same economic wins. So what on earth is causing their stories to split so dramatically? Let's dig in.
Now, this is where things get really interesting. If you were to describe these companies from, a 30,000-foot view, you'd use the exact same words. They're both top dogs in tech and consulting, and they're both betting the farm on AI. For all intents and purposes, they're direct competitors playing the same game.
And that similarity just makes that massive performance gap even more puzzling, right? It tells us we've got to look under the hood. So what is the one fundamental difference, that key distinction that Wall Street seems to be so focused on? And here it is. This slide gets right to the point. It all comes down to their core business models. Think of it like this. IBM makes a huge amount of its money from software and platforms, things it owns, licenses, and can scale up with almost no extra cost. Accenture, on the other hand, is mostly a services company. Their main product is their people's brainpower, which they sell by the hour.
Now you might be thinking, what about leadership? And that's a good question. Both companies got new CEOs right around the time this 5-year period kicked off. Arvind Krishna at IBM and Julie Sweet at Accenture. And while leadership is always a piece of the puzzle, the market seems to be reacting to something much, much bigger. And that big something, that huge catalyst, is AI. Artificial intelligence isn't just another new tech product, no way. It's a force that is completely changing the basic math of how work gets done. And it's putting these two different business models, software versus services, to a very, very public test.
So what it all boils down to is what the market is rewarding in this new AI era. And the answer seems pretty clear. Value is flowing to companies that own the intellectual property, that control the software platforms, and that can use their own massive data assets. The big bet is on scalable tech, not just scalable teams of people.
This quote just nails it. After kind of wandering in the wilderness for a few years, especially during the cloud boom, IBM's software-first strategy suddenly looks like it was tailor-made for this AI moment. Under its CEO, the company has a clear story to tell, and it's a story investors are really starting to believe in. Which leaves us with the million-dollar question for the future. And let's be clear, this doesn't mean Accenture is in trouble, not at all. But the challenge for them is huge. Can they reinvent their services model so it's not just about selling hours? Can they become a truly unique AI-powered partner in a way that the market gets excited about? Their future, and maybe the future of the entire consulting world, really hangs on that answer.